This might be a little bit of a hot take as well, but um, I think all these companies trade on memes. Like fundamentally, is there a reason that something like Grass is really doing $2 billion worth of or whatever it's FTV? Is Helium really doing 1.3 billion? Is HiveMapper, I don't know what they're trading, maybe it's 500 million. Like, are they really providing that much value? If you were to use any sort of reasonable valuation approach, even a generous one, I don't think you would arrive there. I think people are investing in ideas, and that's why meme coins have taken off because it's just truly there's no fundamentals except for the idea. And so I think
This is a fun episode. Carl is a Solana OG, member of the Monkey DAO, and partner at Six Man Ventures, a fund that is specifically focused on consumer. Carl, it's great to have you here.
well, super excited to be here, Nick. I enjoyed our conversation before, and thankful we have the opportunity to dive one or two layers deeper.
Fantastic. If you could give us a quick intro into who you are and what Six Man Ventures is for any listeners who are not familiar, that would be great.
Sure. Six Man Ventures was started in 2000 by Serge Kasarjan and Mike Dudas, longtime friends and both entrepreneurs. The fund really started because Mike founded The Block, the crypto research firm, back in 2018, and he ended up selling it in 2020 or early 2021. But during that time, he was seeing so much deal flow from incredibly talented people that he's like, I can't even write angel checks into these fantastic companies. And so he and Serge said, let's actually raise a small operator fund that, they'll keep working their full-time jobs, but then invest on the side. And so they ended up raising about an $8 million fund, which was Fund One. That fund was wildly successful, had many great investments such as Magic Eden and StepN and many others in it. And so from the success of that and just the enjoyment and fulfillment they had, they said, hey, let's do this full time. And so then in 2022, we closed our what I'll call our flagship fund or Fund Two, which is a $140 million fund. And we focus primarily at the application layer. So, the general thesis is we have enough block space largely. We need to actually fill the block space. And so we invest in applications that help do that. That ranges from everything from social to gaming to DePIN, really any application that can benefit from being built on blockchain. We're a team of about four people. We end up writing checks between as small as like 500K if we're involved or leading a pre-seed deal up to $5.5 million, which is the largest check we've written out of the fund.
Fantastic. That's a great overview. Thanks for giving us that, Carl. So I'd like to dive right in and talk about a recent tweet you put out. You said, I'd much rather see a growth plan than a product roadmap. Could you expand on that and tell us why that is?
Yeah, I think because at the heart of crypto, it's mainly about community. And a lot of times we see teams that have these really terrific um, roadmaps of, okay, great. This is what I'm gonna do over the next quarter and then the next quarter. And, there's a team we had this conversation with where they had a really good product roadmap. And, what I told them was at the end of the day, it actually doesn't matter what set of features you build. Like what matters is that you gain traction on your product. Or if you're building more of a consumer app, you gain traction on your product and in your community. And so ultimately, the number of features doesn't matter, the engagement does. And so basically, I encourage this team to instead of focusing on building new features, just having the entire team focus on finding the next set of customers that's going to help grow their AUM and help grow their product. And they've been doing that. They're doing an incredibly good job. But it was just a great reminder to me that, again, as an investor, what am I investing in? I'm not investing in a product roadmap. I'm investing in impact that is being created in the crypto ecosystem, and growing and have a plan on how you're going to do that is absolutely critical to that. So that was really the genesis of the tweet. And you know, I think we've seen some founders that sometimes want to build, but at the end of the day, it's not just about building. It's really about going ahead and building that traction on the product.
Yeah, I 100% agree. I'm curious if you have any examples of growth strategies that you've seen work out really well that, stand out to you in your mind.
Yeah, I mean, it's a good question. It entirely depends on what kind of product you're building. So if you're doing B2B, it's a very different strategy than B2C. Maybe I'll start with a hot take. On the consumer side, we've seen a lot of teams launch Telegram apps. It's sort of like, hey, you know what? While you're building, you have a MVP or some sort of fun game or experience in a Telegram app. And these apps could get a lot of interest. I mean, you see 20, 30, 40, 50, 100,000 users on them. I'm not sure yet, though, how many of those have actually translated into real users of the platform. So again, if you're building a fully Telegram-based experience, then I think having a Telegram bot or something is great. It's like it is the product. But a lot of teams have been focusing on building out these Telegram bots or experiences to convert to sort of as top of funnel to then convert those users eventually into users of the product. And I think the jury's still out. You know, if there's any good examples out there of teams that have crushed it and had a high rate of conversion, I'd love to hear. But even when we look at Telegram based applications to invest in, they tout millions of users. And at the end of the day, we take a pretty high discount rate on the actual number of users because we know that there can just be rampant bots and other sorts of activity that's taking place. So I think ultimately, that's one strategy. We'll see how it works. On the consumer side, I think having a unique story and being first to a category are really, really important. For example, like Pump.Fun was the first meme coin launch, or at least the first one that had any real volume on it. And so being first to a category and having your application be like the best in the world at one thing are really, really valuable ways to help differentiate your product in an otherwise crowded market. Um, on the B2B side, let's see, strategies that worked really well. I think I think at the end of the day, we've seen that the best companies are not just founder led, but they're founder advocated or founder evangelized. If we went through all the prior, OG DeFi protocols, everyone knows, Hayden led, Uniswap, Stanny led Aave, Robert Leshner did Compound. And I think it's not just enough to have a great product on B2B or B2C. It's like you also, as the founder, need to be an evangelist for your product and almost have this persona that emerges and that makes people want to use the product above and beyond the feature set itself. So that's another thing I encourage founders on. And we actually had another founder that's really terrific. He was saying, "Hey, how do I, who can I hire to help grow my, Twitter presence?" And I was like, "You can't. You just have to do it." And he's like, "Oh, okay." And I think he's done a terrific job, but it's just a really good reminder that these are founder-led businesses in a founder-led industry. You look at Tolly, you look at a lot of the, Vitalik. These are the people, the reason people use these products and engage, build on these platforms is because the founders have set such a clear, exciting vision at different points of the life cycle of the blockchain or the product.
Yeah, I really resonate with that. One of the good examples that comes to my mind is Ariel from HiveMapper. He does a great
Yeah,
job of being so stoked about his maps and really differentiates his product as anything, nothing else in the market competes with it. Um, and yeah, I think that like getting people excited about it is definitely a challenge for a lot of these founders because they're so technical, but
yep,
they're not familiar with growing Twitter.
yep. Speaking of HiveMapper, that's one of the DePIN projects I'm most excited about. Um, there's a framework I've been building. Actually, I'm going to write this down. I just haven't yet and publish it. We put all of our sort of thesis and papers on our site, so definitely for your viewers, check it out. But I'm going to write one on DePIN and a framework for evaluating DePIN projects. And like at a high level, if you have any number of these things in your DePIN project, I think you're going to be able to. You have a higher chance of being successful than if you don't. The first one is the product itself not only is lower cost than a centralized provider, but it's also a radically better product experience. Going back to HiveMapper as an example, Google Maps has mapped a lot of the world today, but those maps are only refreshed once every 6 months, once every year, very infrequently. And I think you can't have a centralized planning unit really organizing this rapidly and doing so effectively. Instead, you have something like HiveMapper that can give you refresh rates as low as, again, once they have density, you could say every hour. You could map or even more frequently in some cases. And so not only are they providing a lower cost solution, it's actually a radically better experience. So I think category one is the DPIN able to provide a radically better experience than a centralized provider, not just compete on cost. Number one. Number two is the demand side of the product also like a supplier of the product. And let me give you an example. The exact opposite of this is something like a Bitcoin miner, where at the end of the day, as soon as it's unprofitable to operate a Bitcoin miner, most of them shut down. They're like, great, and then I'll start up when it's operational. So in other words, you need to supply a certain amount of token emissions, and there's energy and other things. But at the end of the day, you need to supply a certain amount of token emissions in order to keep them engaged on the platform. Otherwise, they turn off. And it's pretty hard to have a reliable network if you have people going on and off all the time. However, there's other networks, if you think about the exact opposite, something like Napster back in the day, where there was no token, but people were both users of the product and suppliers of the songs, right? Like I had both. And so I think in that case, you don't even, in some cases, like need a token to bootstrap the network because the product and demand is there where if I'm going to participate in the network, I also can supply at the same time. And I think, HiveMapper can also do an interesting thing here where throughout a lot of the world and increasingly, people are buying dash cams. And it's mainly to prevent insurance fraud from cars. It's to protect themselves if they get into an accident. And so if I'm a user and I'm going to buy a dash cam regardless, it's like, wait, if I buy this model, I can now get tokens on top. Like that seems pretty cool. So I think because of that, in theory, they would need to emit less tokens to bootstrap the network than something else that the supply side is radically separated from the demand side. So I think they have that going for them as well. And then what is the last piece? Oh, and then the last thing is that the more geography matters in your network, the better a moat you're going to be able to build. So for example, I'll give you the one extreme. You have a lot of these networks focused on, GPUs and compute and other things because latency is a factor, but if a data center is, let's say, 2 miles away from here, or 2 miles one way or the other, it's not really going to have a difference on your latency and a radical difference in the experience. But when you're talking about a HiveMapper street, when we're talking about Helium and cell phone service and wireless coverage, like geography matters a ton. And so the more geography matters, the more it is for somebody to come and replicate your network. So that's kind of my framework. And I think if projects have two of the three of those, they're in a very, very strong position to build a large moat and ultimately build a lot of business value. I know that took a little bit of time, but I think it's important to unpack that. And I think HiveMapper really can hit all three of those. So that's definitely one I have my eye on at this point. And I met Ariel Person back in Token 2049. He's terrific.
And HiveMapper is not a portfolio company of Sixth
It's
Million,
not a
right?
portfolio. It's actually funny. So because we're one of the newer funds out there, a lot of these teams did raises. Like Helium is another example where they raised a lot of the earlier rounds. Like we weren't even around. So a lot of these super OG projects, the Uniswaps, the obvious, like we just weren't existent. So we've been able to invest over the past 2 years in a lot of new age fantastic companies, but not some of those OG ones.
Yeah, yeah. One of the networks that I'm really excited about is Dawn, the
Hmm.
Neil's network. I think that could be one of those that the demand side kind of meets the supply side, where someone
Yeah.
like is already going to have the internet, so it's really easy for them to share. Are there any other ones that meet that criteria of the demand like being the same as the supply side, aside from HiveMapper that you can think of?
I think Helium could be another one. I actually don't understand the details enough, but my intuition is if you're living in an area with somewhat spotty cell phone coverage, if you plug in to your internet this wireless router, well now you might be able to get coverage for X number of miles around your house because you set this up, and that's really valuable. Hey, you want to go out in the yard, you want to go do things. It's like I'm actually enabling myself by having this emitter. And so I think in certain cases it does meet those requirements. In the case of like New York City, I have pretty good cell phone coverage, so I think you lose some of the demand side equals the supply side. But again, people might enroll and they get cheaper cell phone service. So they're like, yeah, I'll get cheaper cell phone service, and all I have to do is set up this device. It's kind of a home run. So
Yeah,
I think that's another example. I think you mentioned Dawn, which is another great one. So there's definitely some out there that's the case.
yeah. And I'm thinking about DePINs as kind of like an anti-cyclical. Like currently, everything in the crypto markets has followed these market cycles of usage. Like if we have another 90% drawdown, I don't know how much traffic Pump.Fund will generate, but something
Yeah.
like Dawn or Helium might still see a lot of usage, and I think that would be a really interesting thing to see because I don't think we've experienced a bear market with DePINs that have had usage yet.
Yeah. This might be a little bit of a hot take as well, but um, I think all these companies trade on memes. Like fundamentally, is there a reason that is something like Grass is really doing $2 billion worth of or whatever its FTV. Is Helium really doing 1.3 billion? Is HiveMapper, I don't know what they're trading, maybe it's 500 million. Like, are they really providing that much value? If you were to use any sort of reasonable valuation approach, even a generous one, I don't think you would arrive there. I think people are investing in ideas, and that's why meme coins have taken off because it's just truly there's no fundamentals except for the idea. And so I think people are investing in these protocols because they love the idea behind these, but the fundamentals, in my view, just haven't really justified these valuations at this point. However, in a bear market, when people are not as much investing in ideas, the prices are going to come down. And then you actually might find a point where the fundamentals of the network are actually supporting the price rather than just mimetic value or market value or other things. So I would look at the stronger the fundamentals, it helps establish a higher floor price. And of course, as you improve fundamentals, let's say you 2x the number of users, 2x the number of revenue, people are going to then invest even more in the idea because it's a momentum. You're showing momentum, and therefore people are going to buy into that momentum. So I think these things are definitely going to continue to relate to the market. But to your point, there's going to be more activity and they're more resilient to deep, deep, deep downside swings than things like memes, which again are great and I love, but there's just less fundamentals there.
Yeah. And speaking of bear markets, I'm curious how Six Man views market cycles. Two questions. Do you anticipate another deep drawdown of 70%, 50 to 90% drawdowns across the board in the crypto markets? And does macroeconomics impact your investment thesis on when to deploy?
Yeah, it's a good question. I think I've learned a lot over a couple of years of being an investor. And I think the rudimentary way to think about company valuation is, oh, well, this company raised here, or this token is trading here. This company is working in a similar category, therefore we should expect it to go to this price. And what you realize is there are going to be drawdowns. Like the economy goes up and down over 4-year cycles or 7-year cycles. There's, different ways to look at it. But at the end of the day, like we're not immune from drawdowns. I do think that, as we've seen with Bitcoin, the drawdowns each subsequent cycle is less. Like if you look at the peak to trough of Bitcoin over the past bear market, it was lower than the peak to trough of the prior and peak to trough of the prior. So I do think like the volatility reduces over time as these networks get larger and have more variety of different use cases on them. But in the end of the day, there's going to be drawdowns. But I think what this helps us do is realize, hey, we're investing long term in these projects. And so we don't go to euphoric valuations during a bull market just because other teams are raising there, other investors are deploying there, because we know that it's going to actually take like 4 years for us to, even if we sold the token day one for every single project, it's going to take 4 years to eventually like realize value on this. And a lot of our teams, we don't sell. We still hold 100% of the position. And so we're long-term investors. So we're less concerned about the market cycles. And what we realize though is there is cycles. And so you can't assume that it's up only from here, that there's might be times where you're vesting into a down market. And so it just helps us be a little bit more focused in our approach and maybe steady than getting euphoric in valuations.
Mm-hmm. Yeah. Yeah, that makes a lot of sense. And so you guys do not really consider macroeconomic factors, like you'll be deploying regardless of like if the Fed is cutting rates or
Yeah.
like global liquidity is up. You're more focused on the apps and the long-term vision, and so it doesn't
Have some
really
long-term
impact.
vision. And again, the only change is that in the bear markets, you do tend to get better valuations, like more reasonable valuations. I think there's times valuations get silly in bull markets where, a team has a PowerPoint deck and they raise it $100 million. And you're like, okay, well, this is getting silly. So sometimes we slow down at really tippy bull markets if we can't get prices that we feel we can underwrite. And I think that's great. Like as an investor, you want to be buying in the bear market. You don't want to be buying at the peak, right? So it might have an impact, but we've issued two term sheets this week, and even though we're in a bull market, we feel like the teams and the founders are really sound and the valuations are fair, such that we can underwrite this and support that team long term.
Yeah, yeah, that makes sense. I was talking to Diego from Frictionless Capital, and he said,
Hmm.
he's just excited about looking at the market size for a given app, and seeing like valuing it off of that, and seeing like if it could reasonably approach that market. And it doesn't matter what the macroeconomic cycles are looking like or what the crypto cycles are looking at. It just matters if that market is accessible and at what price you can get in the deal. And it sounds like that's a similar approach that you guys have.
Yeah, and we love the frictionless guy. So I'm assuming they're really smart as well, and so I'm assuming they have a similar approach.
Yeah. Um, so let's talk some more about apps or yeah, applications. Are there any like crypto applications that excite you the most? Um, either in terms of like impact on the world or like sustainability of their usage, things like that.
Yeah, there's so many out there. What I like about DePIN as a category in terms of apps is it brings cryp- users to crypto in a new way. So, some crypto experiences are highly crypto forward speculation. It's sort of like pump dot funds the sort of perfect embodiment of this. Versus, somebody might be on DePIN network because they want to get a dash cam. They might want to get new cell phone providers, but now they're in crypto. Now they have a wallet. Now you can start doing things with the tokens that you receive. You might want to trade them. You might want to borrow against them. Um, so I think those types of products are like DeepIn is a really great starting point for many users that's going to bring in new users that don't want to speculate on, our cat coin's going to go to the moon, right? So I think that's a great category. I'm still a really big fan of X to earn as a primitive. Stepin at the time of its peak was, had 500,000 MAUs at least, if not more. And a lot of these people on the app were not crypto native. This was the first thing that they did in crypto. Like, oh, I buy a pair of shoes, I walk, I earn. It's incentivizing me to do healthy habits. And so I think this category is not going to go away. And I think we're going to see many, and we already have started to see many new versions of this. For example, we invested in a sleep to earn app, and you might think, "Oh, sleep to earn, that's a wild idea." But actually, they're building a game out of it. And so if you enjoy the game, you get more tokens by sleeping better. And just that simple idea of, hey, using games and fun to help improve health outcomes, I just find to be totally fascinating. You also have these in that same extra earn. You also have these vape to earn products, that are being built. We've seen a couple of them. And if they can actually help convert people from nicotine-based vapes to, let's say, herbal-based vapes that are you don't have nicotine, well, you're actually creating healthy habits and people are getting rewarded in the process. Other things like Moonwalk Fitness, which basically get people together to pool capital to hit a certain goal, whether it's X number of steps per week. And those who don't meet the goal, help pay are subject to the rewards in the pool and everyone else is. So I think crypto, because you can instantly pool capital together or incentivize certain actions, I just think it's going to be wide open in the future. And it's going to be, again, another way to bring new people into crypto beyond speculating on cat coins. So that's another category I find exciting. I think as well, like tokenized collectibles. We've seen a lot of versions of tokenized collectibles over time, or real world assets, depending on what you want to call them. And they haven't really taken off yet, but I think we're actually getting to close where if you look at the demographics of, young men, for example, 20 to 35, on what they spend their money on and what they collect, they're buying watches, they're buying rare bottles of whiskey, they're buying these things that, like, our parents did not buy. And like that was not the way they invested their money, right? They're investing in culture. They're not just investing in financial primitives. And if you think that in crypto, you now have a much easier ability to build a collection, get better liquidity, borrow against your collectibles and make them financially useful. I do think in the next 1 to 2 years, we're going to see some big breakouts on the tokenized collectible side. Again, especially in a bull market where people have their assets and like, oh, I just got a huge gain on whiff or something else, and I want to be able to convert that into something. People are going to be wanting luxuries. And if it's available on the blockchain instantly, I think there's a growing market there.
Yeah,
That's a
definitely. And
couple, and there's many more, but like that's a couple to highlight.
yeah, and on that like real world asset like collectible piece, like Baxos, I think Baxos, they're the whiskey slash like fine liquor market, and that's really cool because they make the markets way more efficient than they otherwise would be, and I think
Yeah.
that's like a great thing about crypto is that Markets are an inherent piece of what we do well in crypto.
Yeah, I'm actually an
Um,
angel investor in Baxis. I know Todd really well. So
awesome.
they're a terrific team, and even like a simple use case where we had an offsite and we wanted to reward the fund that let us use their office, and to go ahead and like try to buy a bottle and have it shipped there is kind of hard. So instead, what I did is I found a rare whiskey on Baxis and I just, sent the NFT. And so then instantly across thousands of miles, it's, hey, here you go. Here's your NFT. And it's a very rare whiskey that they can, choose to claim ownership of and like actually, drink it, or they can just hold on to it as a fun investment that they can show people. So even simple use cases like that, I'm like, this is so much easier than anything else. And before I could never gift someone whiskey easily that I didn't see in person, but now I can.
Yeah, yeah, I love that. I finally feel like we're getting to a place where we have apps that will stick around in the next 5 years. Like these. It was sad when I joined in 2017 to see that it's just a graveyard of like nothing
Hmm.
from 2017 is really still around. But now it feels like in 2030 some of these things will actually stick around.
Yeah,
Um, so now I'd like to move to stablecoins. I know we don't have very much more time, but if we could talk some about stablecoins,
let's
that'd
do
be
it.
good. All right. So recently, you guys invested in Pay at Six
Yeah.
Man Ventures. It's a payment app focused on privacy, and I'm curious to hear your thesis behind the investment and any thoughts you have about it.
Yeah, no, that's a great point. So, in all transparency, we invested in Pay when they were building a separate product. And then basically they pivoted into this. And, we were supportive of it and we doubled down on them. But just to be clear, the original thesis is different than the current thesis. So I'll walk through the current thesis. The current thesis at the end of the day is we cannot have a global financial system that's completely public. It's just not going to work. There's certain things where it's fun to know what meme coins your friends are trading, and that's great. That should actually be public. It's better that it's public. But when you talk about mass market payments, you can't have everything be completely visible. Companies might not want their sales being viewed by their competitors and every hedge fund out there. Um, people might want to be able to send and receive money and have the right to do that without having it be tracked down to this penny by any sort of government or people that, individuals that they don't want tracking their assets. So I think privacy as a right is, especially for financial payments, is very important. And right now, there's really no integrated way to do that at scale. So what Pay said is, hey, we're going to build a private crypto payments network that also have elements of compliance in it, such that they can prove to governments or other, let's say stablecoin issuers, et cetera, that I haven't interacted with any, as an example, OFAC addresses, but I can still maintain privacy generally. So very, very few people, only under specific situations, can actually view any of the transactions that take place. And what they did is they basically said, hey, Venmo's a great product. How do we make it crypto native? So if you go into the Pay app, I don't know if you have if you want to sort of overlay it afterwards with a view, but basically it's a super easy application where I can send and receive money. And the thing that's really awesome, there's a couple things that are really awesome. One is I can use Apple Pay. And you think about how hard it is to onboard into crypto. Anybody can download the Pay app. You can go with I use Apple Pay and I put on $100. I double click, scan my face, and all of a sudden I have $100 on the platform. And like you can't do that anywhere else. So I think they've made it truly frictionless where anybody can pay anyone very easily. So the user onboarding and general experience is unmatched in our view for any of the payments apps we've seen. Second, the thesis around pay by link. At the end of the day, all of these companies want to build their own social networks. And, so let's say we go grab dinner and I owe you $20. Why do I need to get another like social credential from you for Venmo? Like, it's kind of silly. Like, I don't actually need, we were already texting or interacting to coordinate. Why do I need to get your Venmo ID? Instead, you can pay by link. So what happens is when I want to pay you, I create a proof on my phone, and that proof is a self-contained, essentially ephemeral wallet that contains the digital cash. And I can send that over a link, email, text, WhatsApp, Telegram, any sort of application you have. And then you can then claim that ephemeral cash on the other side. And so rather than needing to build all these new social networks, it's just let's use the existing ways people already communicate. So it's super easy for anyone to, um, be able to send and receive money in that way. And again, thirdly, I think the last piece is in the US, people don't really understand stablecoins and why they're helpful. But if you go to Latin America, if you go to a lot of these emerging economies, very, very large percentages of the population are using USDT and other forms of stablecoins because they're, subject to rampant inflation in their home fiat currencies. And so I think Pay has a really big opportunity there to actually convert a lot of these users to help them save and then help them make payments on their goods and services that they need.
Mm-hmm. And Pay is an app chain, so I'm curious to get your perspective on if the loss of any kind of composability matters much in this case, or do you have a view on it? If it matters, or if it's fine to be an app chain in this case?
Yeah, it's good. So you might be referencing the piece I wrote on composability and its value in crypto. And here's the thing. I think private data you actually don't want to be composable. Like the whole point is that it's not public. And so by reducing the sphere of it, you actually I think they want to and will create their own sort of network of composability within their ecosystem. But like at the end of the day, I think having a purpose-built network is totally fine for this type of product because you need a certain level of speed, you need a certain level of privacy or other UX conditions associated with it. And again, at the end of the day, I think they will have composability where you can start investing in DeFi through their application. But I think, at the end of the day, would it be perfect if you were perfectly private, but then also composable? Sure. But I think for this is I think the right step for them to grow massively.
I agree. It's a good first thing you need to have is privacy in your payments app, and they did say in a podcast I've listened to with them they did say that composability and like DeFi is going to come later, but first
Yeah,
they want to nail the payments piece.
exactly. And I think like at the end of the day, so many crypto products are broken or don't work well. So if you just have something that's dead simple and it works, like there's a ton of value in that.
Exactly. And then I'd like to do some rapid fire questions before we log
Yeah,
off. Does that work for you?
yeah, let's do it.
Great. So give me some contrarian opinions in a few sentences, if you got any.
I think I shared a number of mine around what did we talk about? We talked about the overvaluation, I think, of many DePIN protocols. Now, by the way, that
Mm-hmm.
doesn't mean they're not going to go up. They certainly probably will go up over the cycle. I'm just saying if you mark it relative to any sort of reasonable fundamentals, it seems overvalued. But again, I'm very excited for many of those. Contrarian views. I don't know. I mean, I think a lot of things are contrarian, but it's hard for me to pull them out immediately.
Yeah.
But if you ask me a different question, maybe my view will be
Yeah,
contrarian.
maybe we can go into bit specifics. Do you have anything? There's a lot of talk about composability and L2s and how different scaling methods for,
Yeah.
you know, different L1s, and people say things are centralized versus the fragmentation of like ETH
Yeah.
L2s. Do you hold any strong opinions there?
Yeah. I mean, my general take is that general purpose L2s are going to erode over time. I think what you're going to see is monoliths that have high levels of composability, or you're going to have app chains that have their own, I'll say, unique assets or capabilities that they are essentially self-contained and work well. For example, I think Base. I think Coinbase has basically said, hey, instead of trying to build an application ecosystem on a general purpose chain, we want to build our own developer ecosystem using our brand as an asset, right? I think similar if you see Disney with its own app chain someday, like they don't, it's much more economically beneficial for them and it's easier to maintain the IP because that's the unique asset they have is this IP to keep it all on one chain than it is to try to say, oh, we're going to try to launch projects on general purpose chains. So I think you're going to see situations where app chains are relevant, useful, and beneficial for the consumer. I think there's many other apps that are going to launch general on the monoliths like Solana or other things that scale very well. I think this muddy middle is going to struggle over the long term.
Mm-hmm. Yeah, definitely agree. It's interesting to try and piece out where the app chains fit in versus where they don't, where you want a monolith. I think it's still something a lot of people are trying to figure
Yeah,
out.
because the other thing is like, oh, it's sort of the playbook is if you're successful on a general purpose L2, then you launch your own app chain. So it's kind of like once companies graduate, it's kind of like these app chains are going to always, sorry, these general purpose L2s are going to struggle to actually maintain companies over the long term because it's more beneficial for them to launch their own app chain over time and start to build out their own ecosystem. So yeah, it's like once somebody gets big, the plan is to to move off. So I think
Mm-hmm.
they're going to struggle.
Yeah. What's your favorite thing about working in crypto?
I think it's the fact that we have incredibly bold founders. So, we have founders that are trying to change the world, that are tired of government overreach, tired of bureaucracy, tired of failed fiat systems, and trying to replatform not only the financial system, but even like the social system that we have. And I think when you think about giving power to the people, there's so many founders focused on this mission. And that to me is like one of the most exciting and bullish things about crypto.
Awesome. Well, Carl, I think that's a great place to wrap it up. I appreciate you coming on.
This is great. Thanks for having me. Excited
If
to
people,
I'll see you around and until we chat next time.
yeah, if people want to keep up with what you're doing, where should they find you?
Yeah, so I'm Carl K. Vogel on Twitter. You'll see the actual name is Crypto Carl. Six Man Ventures is our fund. It's our website. We post all of our theses there. So definitely check it out. We also have some really good research on tokenomics there. Those are probably the two best ways to get in contact.
Yeah, I definitely recommend checking out some of the writings on Six Man Ventures, and also follow your partner Mike Dudas. He's
Yeah.
also great on Twitter. Well, awesome, Carl. Thank you so much for coming on. It's great to have you.
Th- Thanks for the time.
All right, take care.
See ya.